Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, July 15th. We're seeing early gains on Wall Street following another round of economic data. The day's big report is a reading of inflation at the retail level. Consumer prices fell 0.2% in June, mainly due to a decline in gasoline prices. The figure was in line with estimates, but excluding volatile energy and food costs, the core consumer price index rose by a bigger than expected 0.3%. Over the past year, core prices have risen by 1.6%, and overall inflation is up 3.6%. Separately, we're getting some disappointing data on the manufacturing sector. Industrial production rose just 0.2% in June, versus a forecast for 0.5 percentage point growth. However, it was the first increase in 2 months, after the earthquake and tsunami in Japan caused supply chain disruptions. Meanwhile, manufacturing in the New York region contracted for the second straight month in July. The Empire State Survey did inch up a bit from June's level to negative 3.8, but any number below zero means that more companies say conditions have worsened.
As we mentioned, stock investors are having a relatively positive reaction to the data. In addition, Treasury prices are holding on to their modest gains, and the dollar is showing surprising strength against other currencies, despite another warning on U.S. government debt. A day after Moody's Investor Service put the U.S.'s AAA credit rating on review for a possible downgrade, Standard & Poor's has done the same. S&P said that, quote, owing to the dynamics of the political debate on the debt ceiling, there is at least a 1 in 2 likelihood that we could lower the long-term rating on the U.S. within the next 90 days. Talks between President Barack Obama and congressional leaders ended yesterday with no deal to raise the debt ceiling. But reports say a backup plan may keep the government from defaulting early next month.
A couple huge names are highlighting today's earnings calendar. Earlier this morning, Citigroup reported a 24% increase in second quarter profit as provisions for loan losses declined sharply from a year ago. Revenue at the third largest U.S. bank dropped 7%, but both the top line and bottom line numbers still topped estimates. Shares of Citigroup are gaining more than 3% on the news. Meanwhile, Google is surging 13%. After yesterday's closing bell, the internet search giant posted a 36% jump in profit growth, and revenue grew to nearly $7 billion. The results blew past not only the official Wall Street forecast, but even the so-called whisper numbers that analysts were hoping for. Google's strength during the quarter was mainly due to increased demand for its online advertising, but CEO Larry Page also pointed to the early success of its new social networking service, Google+. It's already pulled in 10 million users since its unveiling last month, despite only being available on an invitation basis.
Two of the day's biggest stock winners are the targets of buyouts. Petrohawk Energy is soaring 60% on news that it's being acquired by Australia's BHP Billiton. The price tag for the shale oil and gas developer is $15.1 billion, including cash and debt. BHP has made a big push into the U.S. since its nearly $39 billion bid for Canada's Potash Corp of Saskatchewan fell through last year. In February, BHP acquired Chesapeake Energy's shale gas holdings in Arkansas and some of its pipeline assets for nearly $5 billion. Meanwhile, billionaire investor Carl Icahn is trying to buy Clorox. The proposed deal values that cleaning product maker at $12.6 billion, including debt. Icahn is already the company's largest shareholder, with 9.4%. Clorox is jumping nearly 10% on the news. And finally, we want to check in on gold prices. They're dropping back a bit this morning from a record high near $1,590 an ounce. That's the latest from Weiss Research. Have a great trading day and a fabulous weekend.